Hello and thanks for joining us. I wanted to give you a more detailed explanation with regard to the investments that we are recommending to you. So we've had a meeting and a discussion and we've sent paperwork to you, and attached to that there's information concerning new funds that we're recommending. And rather than you just read this, I thought that perhaps this explanation could help a bit. So irrespective of whether we're putting a lot of money in growth assets or a lot of money in defensive assets, in your portfolio we will still have these specific investments in these particular managers that I'm about to discuss. A couple of big changes are as follows. Firstly, what we have been doing in the past is that we have been using investments by what we call passive managers. So a passive manager will just buy, for example, the Australian share market across the board. So they will copy or replicate the Australian share market exactly. And we've used someone like Dimensional or Vanguard to do that. And when they do that, they do it quite cheaply, and that's been another advantage for us. However, what we've found is that with all this market volatility we're going through now, is that if there was ever a time where paying for a service for someone to be active and trading through these problems has been necessary, it's now. So we're now recommending the addition of some new active managers into the portfolio. Now, that will increase the cost of using these managers in the portfolio. In the portfolios that use more growth assets, the increase in costs wouldn't be more than half a percentage point. So if we can make more than half a percentage point more by using this strategy, then it's well paid for itself. So in the cash and fixed interest space, we're going to use three managers: UBS for cash management, we're also going to use Schroders for fixed interest, and AMP for their corporate bond fund. The cash management account with UBS is a straight cash management account. It's currently paying 2 to 3%. There's no risk. The money's a call all the time, but we don't get a lot of money for that return. With regard to Schroders and AMP, we're using these two managers because they are active managers, and rather than buy fixed interest and bond investments that basically just replicate the market over the next 10 years, these guys make active calls, which we agree with, whereby right now they are only investing in short-term interest rates. And that's because if interest rates continue to fall and you have, for example, bonds that are locked in at old rates, then you'll actually lose with this strategy. So we believe that should give us a bit better return and hopefully give us more 3 to 4% than sub 3. With regard to Australian shares, we currently use Vanguard, who basically replicate the Australian share market, and we will continue to use them. We'll also continue to use Hyperion, who basically target shares in the small to medium space. Examples are realestate.com, Domino's Pizza, and they have been excellent calls and surprisingly have made a lot of money. We're going to bring in one new manager called Plato, and Plato basically will look to buy and trade shares that go ex-dividend, and they will be buying these shares and hopefully delivering to us a yield much higher than what the Australian share market does. So the Australian share market currently yields about 4 to 4.5% as a dividend, and the income that we should get from Plato should be more towards 7 to 8%. And there are strategies that we use with them where they will protect us if the market comes off. So with Vanguard and Plato, they are only buying shares in the blue chip big stocks. With regard to Hyperion, they are in the medium to small range, mostly medium. So we've got major exposure to big stocks, but a tilt to the medium caps as well. With regard to international shares, we're going to continue using Vanguard, and we're going to use the unhedged version of that. So that basically mirrors what the world share markets do. And if the Australian dollar continues to fall, which we think it's probably more likely to do, then that fund will continue to be a winner for us. But things can be different, and right now we're seeing a rally in the Australian dollar where it's gone up from 68 cents to currently 73 cents. We're now early in March. And consequently, what we're seeing with this change is that we can't afford to be unprotected if, for example, the dollar keeps going up. So we're going to use the Magellan International Fund, which actually has a hedged option. So they will invest in blue chip international shares, and typically this fund manager is adopting a Warren Buffett style of buying excellent businesses and just holding them. And he's an active manager, and what we're hoping is that his pick of stocks and also being hedged will enable us to protect ourselves if the currency appreciates, and to purchase good quality American and international companies which are doing well. We're also going to use, in the international space, the AMP Infrastructure Fund, and what we like about that infrastructure fund is that half the assets in that fund are actually physical buildings, physical infrastructure investments, and the other half are listed. Similarly, in property, we're going to continue to use the AMP Property Fund, which has been a great investment for us, and again, half of that investment is in listed investments, half of it is actually physically owning buildings. And that fund has been a very good fund for us as well. So the AMP Infrastructure Fund, the AMP Property Fund, half the assets are unlisted, so that will protect us against any downward spiral in the market. We'll also use, in the international space, Platinum, and that's Keir Nielsen's company, and he also is a stock picker. And look, he hasn't had recently the best outperformance that he has had in the past, but he has a bias towards the Asia and China area, and we still believe that that's a very good area to be in because of the long-term growth opportunities from there. Also, he especially trades the currency, so right now if he feels, for example, we should be hedged against the American dollar, he will make that decision. So we've got international investments which are spread around the world with regard to all three international managers, being Vanguard, Magellan and Platinum. Magellan has more of a focus on America, Platinum has more of a focus on Asia, and we have hedging strategies to balance. I believe that this is really the best pooling of ideas that we have right now. We have thoroughly researched this. All the investments have been approved as quality investment grade products to use. I have my own funds in them, and I believe that they will give us the best opportunity to achieve our goals in investing your funds. And before you go, you might be interested to know that behind me is General Longstreet, and he was Lee's great general at the Battle of Gettysburg. And there he is directing the fire of cannon on the third day preceding Pickett's charge. Just a bit of history for you. If you have any questions, please don't hesitate to contact us. Thanks for joining us.